please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi there, good afternoon. You're watching Your Stocks. I'm Mangla Malu. With me is Ekta Batra. Looks like a good afternoon from the mid-cap perspective. Yes, the Nifty and the Sensex, both of them down about 1%. The Nifty Bank down about 500 points. But just keep an eye out on the Midcap Index. A sharp recovery there at the high point of the day. The Midcap Index itself has recovered nearly 500 points from the low point of today's trading session. Another thing that will tell you the picture would be the advanced decline chart. Both the red and the green crisscross line should come up for you. At the start of the trade, we had about 11 stocks in the red for about 1 in the green, and now both of them are virtually at an even keel. Both, there you have it, the red and the green lines very close to intersecting. Apart from that, keep an eye out on a couple of these stocks. They're surging as we speak. Fortis had a volatile day, opened with a big gain. Then we had some news piece coming in, then the company's clarification. Now we're seeing that stock move higher as we speak. Other than that, we have Federal Bank. That one too has moved to the high point of the day. Hi, Ekta.
Hi, Manglam. Well, besides that, the Bank Nifty is still down around 1.5%. We do have a lot of numbers to still reckon with. We have Bank of Baroda and State Bank of India that will be releasing its numbers. Just want to point out that with regards to the European markets, there hasn't been any sort of huge sort of downfall that we've seen in terms of an opening. So that should bode well for us. We have the European markets, FTSE down around 0.4%. The DAX is quite stable. And the Dow futures are also positive at this point, up around 138 odd points. So there is that global stability, and not to mention the oil prices. We still have Brent, which is at the lowest levels that we've seen since the 20th of December. So that always bodes well for our macros and the overall sentiment for our markets. PCL's numbers, and that is a net profit which has come in at around 1950 odd crores for HPCL. So we're just going to get Naveen to talk about it in just a minute, and that is versus our poll of around 1500 crores. So that definitely has come in as a beat for HPCL in terms of at least the bottom line, but we're going to wait by for more details with regards to the parameters of performance as well as other details. So overall, right now we have the net profit figures with us. 1950 odd crores as compared to around 1511 odd crores for HPCL. I think Naveen is now with us to tell us more about the numbers. Prima facie, this is what we have, Naveen, but opening the press release as we speak.
So in terms of the margins, see, for HPCL, the most important number will be the margins. We were expecting it to be around that 4.6% mark, and that will be driven purely by the GRM. So what I understand as of now, the GRMs what we have got is 7.51 for the 9-month ended, 7.51. So I would just need some time to calculate. So that is the most important number to look at.
0.51 compares to around 5.57 on a year-on-year basis. What was the estimate as a whole, say, for the entire
8.15 was the estimate in terms of
what we were estimating for this quarter.
What was the 6-month GRM, Naveen, if you could tell us that number, so it will probably help us in calculating that.
9.13, Mangalam.
Okay, so I think that obviously comes with a little bit of a lag as well.
We can calculate that. So.
Okay. All right, so we're just going to let you look at the numbers really quick. But what we can say about the HPCL numbers is that, yes, we are seeing a little bit of a recovery from the day's low. So we're currently down around 1.6 odd % for the stock, as opposed to, I think, around 1.7 to 1.9% earlier. So maybe there is that net profit figure. And just to reiterate that the GRM for this quarter was expected to be around $9 per barrel, and the 9-month figure.
They are coming at around 9.06.
Okay.
So GRMs for 3 months is coming around that approximate mark of $9 per barrel. Yeah. And our expectation was around that 8.15. So this is a clear beat in terms of the margin. So that would reflect in the EBITDA margins also. Would just like our ticker team to get the EBITDA margins up, because if the GRM is up by almost 10% above our estimate, so I expect the EBITDA margins to be also up around that same parameter itself in terms of the EBITDA overall jump. So I believe this is a good number. That is one reason why we have seen that stock moving up in trade, because PAT is above what the street was expecting. Even the EBITDA, so the
margin is coming at 5.5% versus an estimated 4.6%.
Clearly, so that is the 10%. So your GRMs come in at around that $9 per barrel mark. So clearly a beat on all parameters, be it the revenue, EBITDA margins, GRMs, as well as the PAT. So that is one reason why the stock is moving up in trade.
Okay, all right. Well, yes, absolutely. So I think it is the GRMs which have been taken quite positively by the street, because now that stock is down only around 1% odd. So the GRMs, just to reiterate, as per Naveen's calculation, has come around $9 per barrel. This compares to an estimate of $8.15, and this compares to $7.61 last quarter, and it compares to I think 3.9 same time last year.
Exactly.
So that is the kind of jump that we've seen in terms of the GRMs. So that will obviously bode well for the stock.
One more point I would just like to point out is we would be waiting for the inventory gains. So inventory gains doesn't come in. So that is something which we can't calculate also, because there will be a lot of moving parts. So core GRMs will be around that $9 per barrel mark, but reported GRMs, once removing the inventory, that is something which we'll have to look for, or maybe wait for the company's commentary.
That's a very valid point that you make out there, Naveen. We'll keep an eye out on the inventory gains, but looks like initial prima facie GRMs are a bit of a beat. The stock recovers from the low point of the day.
Talking in terms of a couple of numbers, but before that, we do just a quick word on the markets. Midcap Index up around 0.3%, and as we speak, we have an improvement which is taking place in terms of the advanced decline ratio. So that should come up for you. We have around 1,000 stocks advancing to around 1,000 stocks declining at this point. So that is definitely going to bode well in terms of at least how we're probably going to close up for today's trading session. We've seen an improvement which has taken place in terms of the advanced decline ratio. But let's get talking in terms of a couple of companies now. Intrasoft Technologies is on our radar after the company reported what was a stable set of numbers this quarter. Company saw a steady revenue growth, but margins were subdued. Arvind Kajaria, the MD of the company, joins in on the phone line to discuss this quarter's performance. Mr. Kajaria, it's been an 18% growth on a sequential basis in terms of revenue. Tell us what led to that, and what is probably the next 2 quarters looking like?
Yeah, thank you for having me. We have invested, a delivery engine and our, demand forecasting engine, which has worked out well for us. And as we are able to deliver the goods faster, we have a higher set of customers coming back, and we occupy the premium placement among all the marketplaces that we sell. I believe that is what has led to a growth in top line.
Right, that's a fair point there, Mr. Kajaria. But if you could detail a couple of other things. What was the kind of cash that was generated by the business this quarter, and how does that compare with what it threw up over the last few quarters, the average run rate?
We invested all our cash accruals into higher build-up of inventory this year. Like I just mentioned, we believe that all our systems are finally, on track, and we are confident of having a far better January to March than we've traditionally had. And that is only possible when you have goods to sell. So with that confidence, we've built up the inventory, and that is where all our cash, which we've generated for the last 9 months, have been used.
What was the amount, sir?
I don't have that figure in front of me, but we had to resort to bank borrowing. The current inventory that is there on our books is about 93 crores. So that's the number that I have for you.
What would be a sustainable measure that the company could take in order to improve margins on an average going forward, or considering the 2 to 2.5% that you are working with right now?
Yeah, as any retailer, either offline or online, the more top line you're able to generate, the better, you're able to buy off your suppliers, and that is what keeps them happy. And that is where unit economics and economies of scale kicks in, and what is popularly known as COGS, the cost of purchases, tends to go down. And as that goes down is where your margins kind of see an improvement. So, it's in our interest, and it's our focus area to invest all our resources to growing the top line to that objective.
So what would the internal target be for you to achieve that sustainable run rate in terms of margins, and what would that be?
It's difficult to give you a number, ma'am, but, like I said in my earlier communications, we hit about 30% growth top line last year with a margin of approximately 1.8 to 2%. We hope to beat both the top line numbers and the bottom line numbers as of March of 18 over March of 17. That is what we are aspiring to do.
All right, so what is the number that you're looking at out there? You've done 885 crores in the first 9 months. That compares with 722 crores in the comparable period. What is your target for FY18, FY19 and FY20?
It'll be difficult to give a target for 19 and 20 as of right now. But for the current quarter, it is, what we are going through is, we're looking at about a 30-31% growth over last year, which was the similar growth rates that we have achieved as of March 17. So we hopefully just, kind of been able to beat that number.
Okay. All right, Mr. Kajaria, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's InterSoft. Well, we're still waiting by for a lot more numbers. Well, those are the strides numbers which should come up for you. It seems as though some of the parameters look quite good in terms of at least the regulated markets. So the regulated markets, for example, have grown around 29% on a year-on-year basis, and that's majority of the business. And they have the other markets, the emerging markets, which have declined, but that's the internals of the group. The EBITDA has come in with a decline of around 13% on a year-on-year basis. The street was looking for that, but we've seen a revenue growth come through of around 2.6%. Maybe, just maybe, the street is liking the internals of the company this quarter, which includes what I alluded to in terms of the regulated markets business, which has in fact grown 16% year Q-on-Q, as well as grown around 29% on a year-on-year basis.
But maybe we should pull up a couple of these sugar stocks, because we're getting lines that the food minister said they're considering scrapping sugar export tax. Earlier, we were talking about these import duties and stuff. Turns out that this could probably be a much bigger game changer for the sugar stocks or the sugar industry itself, when the food minister has said that they're considering scrapping the sugar export tax. So pull up something like a Dhampur Chini, Dwarkesh Sugar, Out Sugar, all of them, they're moving higher. We're seeing a bit of a smidge on the upside for Dwarkesh, and let's see if the other sugar stocks are reacting as well or not. We'll try getting more
Dhampur is in fact up around 7% at this point. Sri Renuka has also spiked up around 5.5%. So the food minister is saying that they're considering scrapping the sugar export tax as of now. So go ahead. We don't know the impact. We
don't know the exact impact, but I'm not too sure if Sri Renuka would be impacted or not as much as the others, because they do have international operations. But Dhampur, like you said, up and moving as we speak. We have Dwarkesh and all the other sugar stocks should come up for you too. They're moving higher, so we'll keep an eye out on that. But talking about keeping an eye out on that, watch out for the mid-cap space. That index has moved 500 points from the low point of the day, 19,900, and a lot of these stocks which are moving higher as we speak. Page Industry should come up for you virtually at the high point of the day, reported a good set of numbers. SAIL, that one too has recovered about 11% from the low point, now virtually at the higher end of today's trading range. And we have Reliance Naval and Engineering, that one too has moved about 12% from the low point of the day.
I just want to alert our viewers that currently we have an export duty of around 20% to liquidate surplus sugar. So that would be actually quite important, because I think the estimates in terms of production has anyway been revised higher. So this would actually bode really well in terms of the surplus, exports that can take place. So the current rate stands at around 20-odd%. But I think we can take a break now, and more queries once we come back. Stay tuned.